Have we finally hit the bottom of this market slowdown? Will we still have a recession? Do we even care about a recession? Today, I'm giving you the lowdown on the October 2023 Phoenix housing data you need to make an informed decision as a buyer or seller in Phoenix, Arizona. Hey y'all, I'm Heidi Littleton, your realtor here in Phoenix, Arizona. If you're thinking about making a move to or buying a home in Phoenix, feel free to reach out to me, give me a call, shoot me a text, or book a chat in the link below, and I'd love to help you make better sense of all of the data as it relates to your long-term goals. Let's kick things off with a bang, shall we? Are we headed for a recession? So we have some millennial buyers waiting on the sideline right now because some inaccurate folks on TikTok are saying to wait for a recession and you can buy a house for half the price, which is just absurd. So number one, are we headed for a recession, and can we expect prices to take a dive if we do have a recession? So will we actually have a recession? And the response is that it has been very mixed, as you can see from these headlines, literally like a 50-50 split. But headlines are leaning a bit more towards a recession, but it's gonna be little with a soft landing, maybe a mild one, so to speak. But do we care if we even have a recession? The fact is, not really. Home values typically don't decline in recessions. If we go all the way back to the 70s, all the gray bars you see here are a recession. The only time we ever had a drop was in 2008. The reason for that was less about the recession and more about the financial industry, who was funding mortgages, and Wall Street had a much greater impact on the growth rate and subsequently drop in home values. And in 2020, prices skyrocketed partially because our crazy rich friends in Wall Street again, who invested in homes. We saw Zillow, Opendoor, OfferPad, selling to Wall Street landlords who said, we don't need any appraisals, those are for you poor people, and it pushed up home prices. Then we see the price drop, and this was due to Opendoor taking almost $1 billion in losses because their algorithms were clearly wrong. So will home prices decline? Based on historical data, no. If we do have a recession, then we will actually likely see home values either go flat or rise minimally. Now, what does happen during a recession is rates decline. Again, you don't need a recession for rates to come down. Will rates coming down send our home prices higher? Not likely, as we will likely see an increase in supply as well. I mean, most sellers right now don't want to move because they have locked in their low rates. So I hope that helps you better understand what happens historically during a recession to allow you to make the best decision. I would not bet on prices coming down, and certainly not half the price. The other elephant in the room, yes, we are all happy about the rate drop recently that we've seen in the last few days, and we hope we have a boost in demand. The problem with these drops is, number one, it's still not that low, although 7.5% looks amazing after seeing those 8s. Number two, when they drop quickly, people also tend to wait to see if they will drop even more. Overall, people like stability, and that's when demand will likely start to pick up. The good news is that FHA is under 7%, so that's always a great option. Oddly enough, we are actually almost right where we were this time last year, so it's been a crazy roller coaster ride with rates this year. Feds did say they weren't raising the Fed funds rate, and they are meeting again in December. So if they choose not to raise them again, then maybe that will give people confidence to purchase bonds and rates will drop again. I don't have a crystal ball, but here's hoping. So let's get into the nitty-gritty. New listings have been arriving at more normal levels over the past 3 months, leading to a rise in active listings, though we are still well below the levels that we experienced 12 months ago. Active listings were up a whopping 14% from last month. However, this is still down 26% from this time last year. This rise in listings will likely slow down as we see our normal holiday seasonality kick in. I mean, people don't like nor want to move during the holidays. We saw mortgage rates rise yet further during October, peaking at an average of 8.03% on October 19th and remaining around 7.9% until the end of the month. This had a chilling effect on demand, and the pending listing count dropped 4,000, an unusually low level for this time of month, and monthly sales were even weaker. Rising supply and falling demand had led to a significant change in the state of the market, and the seller's market is quickly becoming a more balanced, with a few areas becoming favorable to buyers instead. When there are changes in trends, they usually happen first on the outskirts of Phoenix and move inward. You can see this with Buckeye, Queen Creek, Goodyear, and Maricopa all in buyers markets currently. Peoria and Surprise are in balance markets, and most others are in weak sellers markets. However, demand remains surprisingly robust in the new home market, which has benefited from the weak supply in the resale market. New home pricing has increased much faster than resale pricing as a result. As a comparison, the resale median sales price is around $445,000, while the new home median sales price is around $538,000. Offering mortgage rate buydowns has been an important factor in maintaining that demand. We now have to watch the demand numbers to see if buyers respond to rates under 7.5% in the resale market. From a seller's perspective, this is not the time to push price. Price your home well and competitively, and have clear expectations of how long it may be on the market prior to an offer. My honest opinion, I would say only put it on the market right now if you really need it for life change or you get some amazing can't miss new construction deal. First-time homebuyers may feel like the difficulties they're facing in today's housing market are unique and unprecedented. However, high rates like today bring out tools and opportunities for buyers that only emerge when the market is stressed, and they disappear when the market recovers. Baby boomers, considered to be the wealthiest generation today, didn't have it so great when they were in their 20s and 30s. In the midst of building their careers, growing their families, and purchasing homes, the economy experienced 4 recessions, 4 rounds of high unemployment, and mortgage rates that soared over 10 years from a low of 7% to 18%. It took another 10 years to get back down to 7%. During that time, home sales were low, but home values did not decline, similar to today. There are creative ways to take advantage of this market. FHA and VA loan assumptions, seller incentives, down payment assistance, and other tools are designed to help you on your way to home ownership and building wealth. Make sure you are chatting with a trusted real estate agent and lender to help you understand your options. Let's chat about prices. Our median sales price was $440,000. This is down about 0.3% from October of 2022, but up slightly from last month. Did you buy in November through February of last year? Congrats! Your home most likely has appreciated in value, and you likely locked in a lower rate than what we have today. Good on you for making a great decision. So what does appreciation look like for others? Well, if you bought 2+ years ago, you are all good and sitting nicely. If you're like me and bought at the peak of the market in 2022, we have a little ways to go. But we are well on our way to having that appreciation. I actually saw an article from Zillow that says it will take 13 years. This is not true. I actually should do a video just on that insane article. It looks like our annual appreciation is likely to be around 6.5%, which is in line with our rate of inflation. I will talk about that a little bit more next month when I do a yearly recap. This is also a friendly reminder when you see articles or people talking about average sales price or price per square foot in Phoenix. Our averages are highly affected by our luxury market and can really skew the numbers. Add to this the seasonality we have with the luxury market, and this can make it seem like our average sales prices are highly erratic. For example, our median sales price is $440,000, but if you use the average sale price, it would show prices closer to $575,000. It can give buyers a false sense of dread that they can't afford that amount, and sellers a false sense of excitement that their home is worth more. To help combat that, we should really be looking at medians where we can in Phoenix. Just look at all the data you see in articles with a critical eye. If you want the latest and greatest numbers, just reach out to me. I have all of the local data from the best local analysts. Let's chat about seller concessions as we've seen some big changes. We are seeing 45% of closed sales have some amount of seller's concessions, with the median amount being about $8,900. As a comparison, in September it was about $8,000, so we've seen a significant uptick. There are also heavy builder concessions right now. I'm talking $10,000 or more. So if you're a seller, make sure you work with an agent who can do some research on your zip code to help you better understand what percentage of homes have closed with concessions and how much those were. This will help you better set expectations of the offers that you may receive. We are well into our slower season. For sellers, adjust the expectations on seller concessions and how many days your home may be on the market before an offer. Buyers, this is a great time to find some deals with a little creativity. Sellers concessions can help you buy down your rate or Reach out and I can share some of the amazing deals that are available on new construction. They are truly mind-blowing as they work to close out their fiscal year. If you ask those boomers I mentioned earlier if their decision to buy their first home was a good one in hindsight, most will say yes, even though money was tight, it wasn't easy, and rates were high. As always, if you have any questions about buying or selling or the Phoenix housing market, don't hesitate to call, text, or email. All of my contact info is below. If you found this video helpful, don't forget, give it a thumbs up and subscribe to my channel for more updates, insights, and the latest Phoenix real estate market data. Until next time, happy house hunting.